Hello traders, Gary Wagner here. Approximately 10 o'clock in Honolulu, 4 o'clock in New York, Monday, first day of the work week, October 14th, 2013, and this is the daily report for gold and silver. After trading moderately higher through the evening session, you can see the high here of 1290 right up here. We have had the market really come back down near the lows, currently trading at 1272. 1272 puts it off about $1 on the day. The low today is 1269, so we're just off the lows. And as I said, it puts it off roughly $1 on the day, but giving back any of the gains that we have seen. Silver also trading nominally lower. We've got gold trading back to unchanged again, but silver roughly down a nickel, 21.26, low 21.05, and the high 21.77. Now, as I said, we are recording this after 10 o'clock, meaning after 4 o'clock on the East Coast. At 3 o'clock, there was a meeting with President Obama and members of the House and Senate, I believe. And you can see on this daily candlestick that we are now close to the open of the candle, but well defined near the lows of the day. If we go ahead and blow that up, you will see that it's really a long-legged doji. The body color, when you are looking at a doji-like candle, isn't as important as the size of the tail, and I like to see where the market closed in relation to the high and the low. It is still trading, but we are virtually unchanged on the day to maybe 1 or 2 ticks higher. But what is of more critical importance to me is where we are currently falling, and that is below the 61% retracement level that we have identified as a former support level that now could in fact become resistance. The Fibonacci retracement that I'm speaking of is a fib retracement from this last rally, 1181, up to 1435, 61% retracement, puts us at 1274. We're trading below that now. I really believe that this is a pivotal point because currently we are 2 days away from the deadline of funding the government and the upper level ceiling of being able to pay our debts, our debt ceiling. And I truly believe that they will come up with something. At best, what I believe is that what we'll probably see is some sort of a delay in which they pass some sort of bill that kind of puts it off for 6 weeks so they can hash things out. In either case, if they're unable to solve it, we're going to see a large spike in gold. I can't see anything else because that would put tremendous pressure on the dollar. So just the dollar difference alone would give gold a nice boost. However, if they do resolve it, which is what I believe that they will do, and we maintain ourselves under this price point of 1274, I really think that we could go and see this market test 1237. But as I said, this is all relying on what fundamental news comes out of the market and the whipsaw reaction that we will get from that news. And so this week promises to be interesting. You know, when we look at the straight data, there really can be no doubt the tendency of this market is still under tremendous pressure. I still think that the bears are firmly in control of the market, and I see that we do have the potential for more downside in the market. When we take a look at this market, we've had this consistent set of lower highs as the market's gone down. We had, in terms of the lows themselves, we are now getting lower lows here. And so we are really literally stair-stepping to lower pricing. My sense is that as long as we are trading below 1274, we really only have one real level to go to, which is, call it 1240, roughly in that area. There's a couple of tops right here, but aside from that, I really see this as almost a vacuum in terms of different price points that we could find support. There's one other area, and that is based upon these tops right in here that comes in before, call it 1237, 1240, and that's at around 1260. And really all I'm doing is basing it on these sets of tops here, because that's how we logically find different support and resistance levels. However, it is my sense that we will remain under pressure if they come out with some sort of a statement following this meeting that is going on in Washington right now. we could see the market go under pressure and fall below that. However, at the same time, if they come out and it still appears as though we're at an impasse, and realize we only have until the 17th, so we're down to 2 days, then we could really see this marketplace take off. We've been sitting neutral and on the sidelines. My sense is that we want to make a move once something comes out that we can sink our teeth into, meaning they've resolved the issue and we've got a 6-week reprieve, so to speak. That's going to put tremendous pressure on the market, and I think that we've got a good short play between here and, say, 1235, 1237 in that area. However, if they are unable to resolve anything and they're still at an impasse as we get closer to the deadline, or once that deadline comes and goes and nothing has been done, we can expect to see, I believe, a tremendous spike in the market, and we would look for this market to go to 1,300 as high as 1314, somewhere in that area. I would think that that would be the first really logical point to look for the market to go above 1300. So we are in a scenario in which whatever comments come out will really drastically influence the market. And quite honestly, I don't think anyone really knows what's being said and whether or not they'll be able to resolve it. I'm under the belief that they will be. Now, silver's been quite interesting in that as we saw gold under significant pressure, at times silver would tend to follow suit with gold. At times it would move independently. Looking at a daily chart of silver on the left, weekly chart of silver on the right, both in Japanese average format. Still, it's this 2078 that seems to be absolute support. That's our 61% retracement, just as in gold. However, gold, you can see that the market broke below that particular level. It's just trading under, 1274, 1275. It's trading at 1271, 1272, so just under the 61% retracement level. But in silver, we're definitely trading above that right now. And because of that, I feel that if it can form some sort of a base here, there could be an opportunity in silver that isn't available in gold. And the reason I believe that is as follows. If, in fact, we see them resolve the debt issue and we get a large rally in the equities markets, because we already got the beginnings of that today. Market opened, was trading lower for the first half session, but then closed strongly on the day. The industrial component of silver is probably going to kick in, and if, in fact, it does, we could see this market rise. We'll have to see how these things unfold, but they're going to unfold rather rapidly, and they will definitely unfold over the next 2 days. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.